Hi there, Internet. My name is ᴜsᴇғᴜ and I'm one of eToro's most copied popular investors. I get a lot of questions on a daily basis about how I decide which things I invest in. And so I wanted to talk about one part of the way that I value stocks within the core of my portfolio. So let's jump into it. Some of you will have heard me talk about my strategy as a core satellite strategy. Now, within the wider financial industry, core satellite means a very particular thing, which you can read here on screen. But for me, I have a slightly different take on it. So within the core of my investment portfolio, I don't have passive investments, but I do have stocks that are really relatively passive in that they are intended to just sit there for years and years and years, eventually making us outsized gains because they are fantastic companies, and I expect them to have double-digit, in some cases triple-digit returns over a multi-year period. So I'm going to be talking about how I find stocks that I stick into that core, because the stocks within the satellite usually require some other kind of investment strategy. The first thing to note is that when I'm deciding what new stocks I might add to the portfolio, or if I'm re-evaluating stocks that already are in the portfolio, I tend to look at the trends within different time frames. So in most cases, I'll be looking at the 5 or 10-year period, because 20 years out is just too far out. And there might be companies that they're in the beginnings of the industries that we see, but there's just too much risk. We don't know for certain what will happen within that time frame. So you will see a few companies within my portfolio that reflect the trends within the 5-year period. Although a lot of those are incredibly overpriced today because of what happened through 2020 and early 2021. So there are some that I notably am not invested in because I anticipate some kind of a rotation through this year. What isn't on here are the stocks that are the trends that I'm looking in within the next 1 to 2 years. And so I've been talking about the trends that I expect for a while, but just as a summary, I think that through 2020 and early 2021, we saw a certain type of stock that was massively favored. And these tended to be the companies that did very well whilst the world was locked down. The thing is that trend has been overextended. A lot of those companies are a lot more expensive than they deserve to be now, or even when you look at how much money and profit that they're going to make within the next 2 to 3 years. And so I've been saying for a while now that I expect some of that trend through the past year to unwind, and for investors to look for other opportunities within the market, particularly as it becomes more certain that the world is going to open up and those businesses that lost out during the lockdown become favored, and just see more business. And this has happened over the past few weeks. It's been really aggressive through the past week. And if you look at my portfolio, stocks in the UK, stocks in hospitality and in travel have done very, very well through the past, I would say, 2 weeks, 3 weeks or so. When I'm looking for an industry to invest in, I will be thinking about these trends through 1 to 2 years, 5 years, and 10 years. But for now, let's say I want to focus on stocks that are more defensive. So I expect a big rotation out of tech into other stocks, because tech makes up so much of the large indexes within the US. I expect the whole indexes to be brought down temporarily, and because many indexes around the world tend to copycat what the US indexes do, I expect everything to come down for a while. Maybe not as much as tech, but I do expect those prices to drop. And so I want to look at industries that are a bit defensive. So if there is a broad-based sell-off, which industries and companies are likely to not be sold off as much, or even go up in price? What companies might have high dividend yield, so that even if the stock price is changing, at least we're getting payouts through the dividends. And so a few industries like that are within the consumer goods space. And so I don't have a screener that's industry based at the moment. Instead, I've used Jim Slater's Zulu Principle screener. Jim Slater's a fantastic UK-based investor. It's written a very good book, highly recommend it. And the basics of the screener say, find me companies that are relatively small caps. So in this case, £5 billion or less. They've got pretty good price earnings ratios, so they're not too expensive. They've got really low PEG ratios, which means that their prices, even if the prices are high, if the growth is higher, then things are all good. And they've got a really good return on capital. And so I picked the first one in this list. So I don't want any companies that are too small because they tend to be riskier. And ᴜsᴜғᴜʟ came out of the screener, and it's within the consumer goods. Consumer furnishings, I think, is the term space. And so this one is one that I'm going to look into a little bit more. I might spend 10 minutes on it and then chuck it out the window because I don't like it. But in this case, I have done some research before this video, so I know that I want to dig a bit deeper. What I quite often do when I'm looking at a new company that I don't know very well, I do know the brand name, I know more or less what they do, but I tend to jump to their Wikipedia page. And I think investors tend to underestimate how much information there is in a Wikipedia page. In this case, it seems to be the counterexample because there's almost nothing in the Wikipedia page. But quite often it'll tell you about the team members, the history of the company, acquisitions they've made, a really rich source of relatively unbiased information. That's quite important. I do have some summary information here on the right about the business, which is good. And if I click through a few of the links, I can see things like Temper acquired Sealy fairly recently, I guess, nearly a decade out, maybe not that recently. And I can learn a bit more about the history of these merged companies, the products that they sell, etc. I have also, in this case, found something that gives me a bit more information in terms of the history of the company, and I find this is good as a backdrop, and usually it takes no more than 10 minutes to read this information, and then I know something about the company, the people, the products, which is important. The next step, maybe this is the first step, I don't tend to go through, don't dictate an order in terms of the early bits of research, but I want to look at the fundamentals of the business. I'm not going to step through every item here. I'm using Stockopedia. This is a really great app for analyzing stocks. The nice thing is it presents the information really well, but also if you click on the individual things, it tells you what they mean. And so it's a good way to learn at the same time as getting information about companies. I highly recommend it. I'll put an affiliate link into the description, which I think will give you some money off of a subscription. So looking at this company very quickly, things that I might eyeball, I can see that market cap is 7 billion. The revenue is less than or more than half of that, which is usually good. If this was a tech business, that would be outstanding, but it's not a tech business. I would then jump down to this information so I can see trends across some of the key areas. So I can see that revenues were strong and then they became a bit soft a few years ago, and then have been steadily climbing for the past few years, and that the estimates, so the future revenue and earnings are looking really good. I would want to investigate to figure out why there was the softness in these years. Was it something fundamental, or was it just a hurdle that they needed to overcome and then did? You don't want to look just 1 year into the history of a business. You want to look into at least 5 years, and preferably even further back. You want to see that the company is growing over a number of years within that time frame. They don't want to have had issues too many years in the recent history. So if I look back just a few years, I can see that net profit has been growing very nicely, and this has meant that EPS are very good. EPS growth is really good. The forecast values are enormous, and so this makes me very interested. What has caused this business and the analysts to think that this company is going to see such a large uptick in profit in the near future? So this is looking backwards. If I look forwards, so in terms of the forecast PE, it's important to look at the company within its industry, because some industries have different averages. for these particular measures. And so this company is very strong based on the forecasts within its industry. The valuation looking backwards, TTM is trailing 12 months, is not looking fantastic. And so this is an area that I would want to investigate before I decided to invest. I can see that the company is very good at making money. So in order to have a successful company, you need to take money, do stuff with that money, and then hopefully achieve a profit. And then once you achieve that profit, invest that further into the business and hopefully grow how much money you're making in terms of sales and earnings. And the company is pretty good at doing that. A few other key numbers that I would look at are the company's got a good amount of cash, so no major fluctuations. Looks like working capital took a major dip last year, and I suspect that this has driven some of the valuation metrics here. So I'd want to understand why that had happened. Debt is large, but it hasn't been growing like crazy, so it seems that this is probably the amount of debt that they typically operate on. And the number of shares, this is not often looked at by investors, but you need to know if a company likes to increase the number of shares within the business, which would create dilution, which means that each share is worth less. Some companies, especially high growth companies, have high dilution, and so you want to pay attention to that. I can see sales and EPS growth for the interim and prior periods are good, and this is a really good stat. So over the past 3 years, what has the compound annual growth rate been? And so this is not just looking 1 year back, this is the average over 3 years. And I can see that sales and EPS are very good for a company that's making mattresses effectively. From here, we can see that there are a number of upgrades on the earnings and revenue, which is good. I would ignore the actual numbers because people are literally guessing in terms of the numbers that analysts put out there. But what you do want to see is that things are being upgraded and that brokers tend to be enthusiastic. Okay, so the books are looking pretty healthy. We know what the business does. I would spend just a moment looking at the price action to see what had happened recently. So the company is sitting at an all-time high in terms of price. They've experienced the same pattern as most companies out there. And there's this nice giant green candle. This is the 1 week candle, 1 week chart, by the way, because I want to look back over a larger portion of history. And so I want to see what happened here. My guess is based on the date that they had very good earnings. Something else to note is you want to look at the competition out there. So where does the company fit within its area, within its domain? And so by revenue, Temper is one of the largest companies. This company is delisted. It seems to be the only real close competitor, except maybe for ʟscerta. There are some other smaller players, and they seem to be gaining ground. I'm sure a number of you will have seen there are mattress companies now that have strong online offerings, and so they are cheaper typically. I think their margins are higher, and they're a bit more attuned to the way that the younger generation is working, which tends to be online. I would also look at Seeking Alpha, so just to get a feel for the industry as a whole. I'd be interested in things such as how is this company doing against its competitors? So, what is the typical PE like for these types of companies? What is the typical revenue growth like? What is the typical earnings growth like? You need to make sure that these companies are real competitors. So I think this company sells some other stuff, so their numbers are different. But you want to position this company against its competitors and try to decide if it's going to be better than its competitors going forward, because if they are, then they're going to take more and more market share. All right, I did mention, so you want to look at the smaller companies as well as the big competitors, because these companies, if they're really good, they can disrupt that industry and take away some of the market share from the company that you're looking at. So you want to make sure that you know how what these companies are and how they operate, how successful they've been and how successful they might be. All right. What I would do next, or somewhere within this process, is also look at the analysis that's available to me. So I will do my own analysis, but I can leapfrog, I can jump ahead if I look at what other people have already found and concluded. I don't necessarily agree with those people, but it's important to, first of all, get opinions from a range of different analysts, so bearish, bullish, and people that are neutral, in order to fully form your opinion and to make sure that you aren't biased for some reason. So I've read the bearish article. This person says that the growth multiples on Sealy look as though they're for a tech company and not a mattress company. And they made some assertions, and this was fairly recent. This person back in July, they were very bullish on the company because they'd made a number of brick and mortar acquisitions. So they were growing inorganically through acquisition, which would hopefully benefit them in the future. And so you start building out a picture of where the bears sit and the bulls sit with this particular company. Also important is news. And so ᴜsᴇғᴜ is not going to be my only source of news, but it does a pretty good job of aggregating things. And I can see that, yes, there were earnings around the date of the big green candle, and earnings were really good. And so I'd want to dig into what were the specifics of those earnings, and anything else here that I think might be important. ᴜsᴇғᴜ also has a lot of good information. So you can drill into the individual ways of measuring a business and why ᴜsᴇғᴜ has drawn those conclusions or how they generated those numbers. One that I would be interested in looking at when I'm doing my high-level review is what earnings were like recently. And so these are consensus and actuals. So Tempa has been beating earnings for a while, which is good. And what's even more interesting is that if we look at the forecasts, there is a lot of growth that people think in the profit, a lot of growth in the profit for this company. And these forecasts, some of them are based on analysts and some of them are from the company itself. Something that's interesting that I already noticed is that I got quite excited about this massive 323% EPS growth based on this number here. But if I look at the forecasts here, that number's way off. So it's important to have more than one source of information. And I verified the ᴜsᴇғᴜ data against the actual earnings report, recent earnings report. Okay, so I've read a lot of data, I've done a lot of background research. Now I need to go and look at a few of the recent earnings results. And so the reason I want to do this is, even though this information is summarized in several other tools, it is good to read the report because there are little hints of information with regards to sentiment. So even in just this paragraph, you can see that the CEO is quite proud of the record year that they've had and seems optimistic about the year that they will have. If you can listen to the earnings report call, that's also quite good, because people have a very hard time disguising the way they feel about their business when it comes to those calls. And so it's easier to hide things when they're just written down because you can be more considered, but you can sometimes hear in the voices of the people that read the reports, typically the CFO, and tell a little bit more about how they feel about the company, which is a nice little bit of extra information you can get, and it's, costs you basically nothing. And so something you get out of the earnings report is a breakdown of all the various line items, so you can see where the company has experienced the most growth, where they're having issues, what their plans might be, etc., etc. And so here I've validated the forward guidance that they've given against the information that I found in other places. Okay, so I've spent a lot of time talking, and actually I've just given you a summary of the beginning of my process. So the conclusion that I would draw here is that I'm still not ready to invest, but Tempa is looking like a company that I might invest in. I would put them into, I've got various lists of stocks. So this is something that I would put the stock into my list of stocks that are looking pretty good. They're strong potentials for the future. The next phase of my research would be a lot more detailed. I would want to know exactly how the business was running in terms of their brick and mortar stores, how the online sales were going, which is not really in this earnings report, so I'd have to dig into that information elsewhere, learn a bit more about the team, recent acquisitions, upcoming acquisitions, etc. And so to make a long story short, research in individual stocks as an investor is very, very time consuming. And so a lot of you ask me about my opinions on stocks, and I can't always give my opinions because I only have so many hours in the day and I need to focus on a core set of companies. Now, you yourself might not have any interest in doing this. This might sound incredibly boring to you. And that is part of the value of the Popular Investor Program. All right, so that's it for this video. It's been a rather long one, even though I gave you an abbreviated summary of my research process and didn't go all the way into the detail of the next leg of my research. Hopefully that gives you a clearer picture of how I do things, and maybe also helps me justify why I take so long to do stock research for new stocks. All right, thank you for your attention, and I'll speak to you soon. Goodbye.